What is up, everybody? Dan again, Stocktrades.ca. Welcome back to the channel. I figured I almost had to fire up the recorder and do a video today on Netflix because they are absolutely killing it over the last while. I mean, if we look at a chart of Netflix since its bottoms in 2022, outside of like the large scale semiconductor plays, this has been one of the best buys in the American market over the last, couple of years. It's up 291% after some relatively, pretty big difficulties the company was facing in 2022 as a result of declining margins, a lot of intense competition in the streaming space. But ultimately, I mean, Netflix is just proving right now that it is the king of streaming. I mean, we're seeing Disney, Paramount, companies like that really struggle, whereas Netflix is just posting some outstanding results in this regard. I mean, when we look to the overall quarter, revenue grew 15% year over year. Operating margins were 30%, and this is one of the most notable things for the company. One of the main reasons it was getting hit over 2022, 2023, operating margins were taking a big hit. The company was spending a ton of money on content, and it wasn't really working out. Subscriber base kind of started stalling, but now they're starting to gain momentum again, and the platform is really starting to regain popularity. For 2024 in total, they expect revenue growth of 15% and operating margins of 27%. That is a bump up in guidance. They originally had predicted 26%, so that's relatively strong as well. I won't really talk about the results in terms of a content perspective. I mostly want to talk about the numbers. And one of the main drivers fueling the business right now is the ads membership. Now, this is, a platform that is likely to do even better during times when people are pinching pennies. They're willing to, watch a few ads prior to hopping on the platform and watching a video. I know in this day and age, people are so ad blind and are so immune to seeing these ads that realistically they probably don't care all that much. They're willing to pay that lower subscription price, watch a few ads, and get the content anyway. And I mean, we can clearly see this. Their ads membership 35% quarter on quarter. It was up 35% quarter on quarter, and their ad tech platform is on track to launch here in Canada in the fourth quarter and more broadly in 2025. I really think this is going to be an element that does fuel the business. And I mean, when we just look at the overall numbers, we look at Q3 2023, operating margins sat at 22.4%. So we fast forward 1 year later to this quarter, 29.6%. So that is a notable increase in operating margin, which ultimately is resulting in a big boost to net income, a big boost to earnings per share. And as a result, as I said, the company's up, 300% When we look to their fourth quarter forecast, they predict revenue just over 10 bill. And when we look to the fourth quarter of 2023, we're talking, double-digit growth in terms of revenue, 14.7%. But the one thing, again, is that operating margin. When you look to these operating margins of 21.6%, you might, wonder why it's dropping so much. This company is going to have quarters where margins vary just because of, costs that vary on a quarter-to-quarter basis. So what you really want to do is look at year-over-year operating margins. And when we look to Q4 2023, we're looking at operating margins of 16.9%, and now they expect 21.6%. Ultimately, I mean, if you look at earnings per share, they're expected to more than double on a year-over-year basis, which is just outstanding. When we look to total memberships, again, they're just kind of proving that they are the king of streaming. We're looking at double-digit year-over-year growth in memberships. Memberships are accelerating, and I mean, I imagine, again, when they roll that ad platform out, globally, it's going to accelerate that even further. We're looking at free cash flow, $2.19 billion, whereas in the fourth quarter of 2023, we're talking 1.58. And ultimately, the company, as the stock was discounted in 2022, 2023, they've been buying back a bunch of shares, and they now sit at 437.9 million versus around 444 last year. Now, the one thing I want to do is dig into the KPIs for Netflix, just kind of give you some visualization of how well this company is performing. If we look at the average paying memberships, we can see where this company really started to struggle, where competition kind of ramped up in the space. You know, people maybe thought there was a lot of different alternatives to Netflix. We can see here, you know, 221 million total paying members, and that started to kind of flatline. It would grow in the international markets, but the one thing that faced a lot of pressure was its most mature segment, which would be its North American segment, which is the red line up here. We're seeing 74.9 million, and then it dips to 73.9, 73.3. A lot of people during this time started to get a bit scared that this company was losing its momentum as a streamer, losing its market share, things like that. However, in 2023, it started to really ramp up again, and now we're seeing, you know, if we narrow this chart down to, let's say, from 2021, this company is growing its North American audience at a 4.6% compound annual growth rate. Its European audience, 10.47. Its Asia Pacific audience, nearly 20% compound annual growth rate on total subscribers. So the company is indeed getting way more subscribers to the platform, and we're sitting at all-time highs in terms of the subscriber base, you know, after this quarter, 280 million. And when we look to the revenue generation, again, very strong, double-digit compound annual growth in practically every segment. North America, low double-digit. Europe, 15.7%. Asia Pacific 23.1%. This is going to be a big avenue for growth for them moving forward, and we can see it's just been, you know, despite again that 2022 area where we saw a bit of a dip, it's just a constant trend upwards. And overall, if we, you know, narrow this down to again 2021, where the company started to see a bit of a flat line here, many of its segments from 2021 are growing at a high single-digit pace, but I would expect this to accelerate moving forward into that double-digit pace again. Now, one of the most important KPIs for Netflix is going to be its average revenue per member. So this is going to be kind of a monthly KPI to highlight how much money the company is making per membership. And you do want to see this grow on a quarter-over-quarter basis. Sequentially, it's a bit more volatile, but when we look to September of 2024, we're talking $17.10 for its North American segment, and when we go to September of 2023, we're talking $16.30, so that's a pretty notable improvement. When we look from September 23 to September 2022, we actually saw a decline. Again, we saw a decline in many segments. I mean, we can look to its European segment, which is the blue one. It saw a very small increase on a quarter-over-quarter basis from 2022 to 2023, and now it's flatlined a bit, but it definitely is the North American side of things that is fueling a lot of this growth, and I do believe it is from that ad segment. We're seeing 35% growth quarter over quarter in that basis. So that's a main driver of the growth right now, and I think is going to be a main driver of growth for the business moving forward. Now, a lot of people are probably wondering if the company is a buy from a valuation perspective, and I will say that at this point in time, it is pretty expensive. I mean, we're looking at 42x trailing earnings, 32x expected earnings, and we're looking at 46x trailing cash flow. It should improve moving forward, but the company does, like, in my eyes, looks a tad expensive for, a company growing at a 15% pace. I mean, there's plenty of companies on the North American market growing faster than this that aren't trading at 32x earnings. So would I buy the company today? I'm not exactly sure. I mean, when we look to estimated growth, we're expected to see, double-digit growth moving forward. $19.69 in earnings this year, $23.57 next year, $28.14 in 2026. Obviously, 2026 earnings, very hard to predict. But ultimately, I mean, if we look to last year's earnings of $12.25, $19.69, $23, I mean, if we look to the end of 2025, they're expected to nearly double their earnings per share. And this has just been a monumental business turnaround for this company. And right now, effectively, I think they're one of the more dominant players in the streaming space and are probably going to continue to be moving forward. I just think the price is a bit too frothy right now. But the one thing is, the price is pretty frothy in a lot of US equities right now. So I'm not exactly surprised to see this, but good momentum from Netflix, and I would expect it to continue moving forward. As always, everybody, if you like these types of videos, head down below, comment on the video, like the video, subscribe to the channel, and stay tuned for more great investing content.